जीतेगा भाई जीतेगा, भारत
जीतेगा।
जीतेगा भाई जीतेगा,
भारत जीतेगा।
Hello and welcome to Market Cafe. You're on EC now with me, Lisa Fernandez, and with me I have Snehi Shah. And Snehi, I cannot not just talk about what happened yesterday. What a day it was. I mean, the brilliance displayed by Indian team, it was just outstanding.
Absolutely, Lisa.
Yes.
What an exhilarating match. Good morning to all our viewers. Let's take stock and let's talk about the match a little bit. And it was a Virat Kohli and Shreyas Iyer show with the bat as India posted a massive 397 for 4 in 50 overs in the first semi-final of the Cricket World Cup 2023. Earlier, India won the toss versus New Zealand and opted to bat. And Lisa, I think that is what made all the difference if you ask me. And this will be a repeat of the 2019 World Cup semi-final. It was a repeat. Remember, earlier New Zealand had knocked India out, but this time India have managed to avenge themselves. It was Mohammad Shami who took 7 wickets and brought home the win. But how can we not talk about the man, the myth, the legend and the undoubtable king of cricket himself, King Kohli. It was undoubtedly the King Kohli show. The whole nation was rooting for the king during the semi-final. The legend has scored his 50th ODI century, surpassing the god of cricket, Sachin Tendulkar. Kohli, chance took over India as the king etched his name in cricketing history. Not only did he reach this remarkable landmark in front of his cricketing idol, but he also did it at the same venue where he carried Sachin on his shoulders after the 2011 World Cup win. Now with this, Virat Kohli has the record for most runs in a single edition of an ODI World Cup, making him the ultimate cricket GOAT.
ज़्यादा खुशी क्या होगी मेरे लिए। पूरा देश खुश है, सभी फैंस उनके बहुत ज़्यादा खुश हैं और मेरे लिए तो एज ए कोच उससे ज़्यादा प्राउड मोमेंट हो ही नहीं सकता कि उन्होंने 50th 100 आज बनाया, एक वर्ल्ड रिकॉर्ड बनाया, तो ये बहुत बड़ा अचीवमेंट है और मैं बहुत खुश हूँ उसके लिए कि उसने इतना बड़ा अचीवमेंट हासिल किया।
Well, yes, now let's keep our fingers crossed for the main day, but let's see what's happening in the market. Talking about the US market, all indices, they climbed on the back of more encouraging inflation data, and the stocks extended their gains from Tuesday's trading session. Now, the inflation data that came in, it is the second piece of data that has come in after the CPI data came in flat, and stocks rallied after that. Even the October's PPI, that fell by 0.5%, marking the biggest monthly drop since April 2020. And with that, the indices advanced. S&P 500, it advanced 0.2%. Nasdaq, that was flat but still inched higher, and Dow outshone, it added around 0.5%. Even Atlanta's Fed projects that the real GDP that will rise at 2.2% rate in Q4, and this is higher than the last week's projection, which came in at around 2.1%. Now the stock futures, talking about that, it's trading flat currently with a negative bias, and investors will be focusing to a crop of economic data, the jobless claims, industrial production data, all that will be released, and also all eyes will be on the remarks which is expected from the Fed officials, because with the slowing in data, the easing of the inflation data that has come in, it's instilling hopes that the Fed will stop with their rate hiking spree. So the Fed officials like President Loretta Mester as well as New York President John Williams, all eyes will be on their remarks. Now earnings from retail companies are expected. Macy, Walmart as well as Gap will be releasing their numbers. Now that was on the US market. Now talking about European market, even that market closed higher, but Britain's FTSE that inched into a positive territory for the year, and this is after UK inflation print. It fell by more than expected in October to 4.6%, and that was the lowest in 2 years. So that was the handover coming in from US as well as the European market, which looks positive actually for our market. But what about the crude and other commodities checks, Nehi?
Absolutely, Lisa. So solid handover coming in from overseas markets. Let's take stock of what oil has done, and oil prices have actually cooled off. They've tumbled more than 1.5% on Wednesday on a bigger than expected rise in the US crude inventories and record production in the world's biggest producer, along with mounting worries about the debt in Asia. So you had Brent closed just above that $80 per barrel mark, and WTI on the other hand closed around those $76 per barrel mark. Now WTI's front month contract was also lower than the second month for the first time since July. Prices for oil 6 months ahead also look poised to rise above the front month contract. Now WTI's front month contract was lower, like I mentioned, and prices for oil 6 months also they look poised to rise up. And US crude stocks rose by 3.6 million barrels last week to 421.9 million barrels, according to the US Energy Information Administration, that's the EIA. This is far exceeding analyst expectations in a Reuters poll for a 1.8 million barrel rise. So well, that's a very big number that is surpassing what was expected. And the IEA on Tuesday joined OPEC in raising oil demand growth forecast for the year, despite projections of a slower economic growth in many major countries. So well, this is what oil has done. Oil prices have cooled off largely on the back of that. And let's also talk about gold, because gold has held steady near 1 week highs on Wednesday. It's sandwiched between pressure from a stronger dollar and support from expectations that the US Fed Reserve is done hiking interest rates. Spot gold has dipped just 0.1%, close to that $1,960 per ounce level. Let's also talk about the US 10-year bonds then. Now this has gone up a little bit, and it has crossed the 4.5% level mark. So well, all of this has been happening globally. That was the roundup on oil as well as gold.
Right, and let's look at what are the events to keep an eye on today. So we have the weekly expiry today, and on the global front, as I mentioned earlier, US in the initial jobless claims, industrial production, as well as the crude oil inventories, that data will be out. And back home, the companies that will be considering fundraise is DCX Systems as well as Jyoti Structures. On the corporate action front, SEPC will be meeting, the board will be meeting to finalize the issue price of the rights issue. And on the IPO action front, Tata Tech, the price band will be determined.
All right, and let's move on to some global news that we've been tracking for you. And we're getting some somber news from Israel again, because global condemnation fails to convince Israel for a ceasefire. Israel has gone ahead and rejected the UN Security Council's Gaza resolution for extended humanitarian pauses. Meanwhile, after numerous raids, Israeli forces at the Al-Shifa medical complex claim to have found the command center, weapons and combat gear belonging to Hamas militants. As of now, more than 11,300 Palestinians have been killed in Israeli strikes on Gaza since the war has begun.
And shifting focus to the high-stakes meeting between the world's biggest leader, US President Joe Biden, as well as Chinese President, the two met in what was their first face-to-face encounter on the sidelines of the APEC summit. Now, amongst the few things discussed were the curbing of the fentanyl flows into the US, the safe use of artificial intelligence, as well as US curbs on Chinese access to high-end tech. Now, both the sides have also reaffirmed that their commitment to cooperate on the climate issues.
Well, and Microsoft has recently announced a custom artificial intelligence chip which would be competing with chip giant NVIDIA. This AI chip can be used to train large language models and potentially avoid a costly reliance on NVIDIA as well. The company has also built its own ARM-based CPU for cloud workloads.
And UK inflation cooled more than expected in October as household energy prices dropped on year-on-year basis. Annual consumer the price inflation also plunged to a lower than expected 4.6% from 6.7% on month-on-month basis. Now that increase was the smallest in 2 years, and it prompted investors to increase their bets on BOE, the rate cuts which is expected next year.
Alright, with that, it's time to slip into a very short break on this edition of Market Cafe. But don't go anywhere, because when we return, we'll take stock of how the Asian markets have opened up.
Welcome back to the show, and we are on that part of the show where we focus on what's happening on the domestic front. And it's a big setback for Bajaj Finance, as the RBI has asked the NBFC giant to stop the sanction and dispersal of loans under its two lending products, namely Ecom as well as Insta EMI card, and that is with immediate effect. Ankur is joining in with more details on this. Ankur, over to you.
Yes, Bajaj Finance has clearly said that the key fact statement was already present for those two products where RBI action had been initiated. Remember, Reserve Bank of India has said that there was a violation of digital lending guidelines whereby there needs to be a key fact statement which needs to be there for the products, but the company is maintaining, although those key fact statements were already there for those two products, however, whatever deficiencies which has been pointed out by the regulator, the company is going to sort it out very soon. Now, as far as the impact on company is concerned, the company has clearly clarified that there is no material impact which is going to be there as far as the business of company is concerned. Remember, Bajaj Finance has an ambitious plan of doubling its market share, which has been said in the past by the top management of the company, and now Reserve Bank of India action has been taken on those two lending products. The company has said that there is a temporary suspension on those two products as per direction from Reserve Bank of India, but it is maintaining that there is no substantial impact of that RBI action.
Alright, thanks Ankur for all of those details. But what are brokerages saying on Bajaj Finance? Let's take a roundup of all of that. What are the near-term ramifications for the company? Let's look at the consensus view first, and they are all saying that this move is not as severe as issues faced by Bank of Baroda and Paytm. Now remember, Bank of Baroda was also asked to not get more customers on its online platform earlier this year, a few months ago. So they're saying that this is not as extreme as issues faced by Bank of Baroda and Paytm. This move pertains to more of a corrective action required, and this may get sorted in a couple of quarters is what the common word is coming from brokerages. They also expect RBI to review the curbs in the future. They're saying RBI may lift curbs once the company rectifies the deficiencies. Now let's take stock of what CLSA has to say on this, and they're saying that more of an operational breach, not a major violation coming in from Bajaj Finance, and they may need tech upgrades to issue KFS on the spot. They should be resolved in 1 to 2 quarters going ahead, and this ban could impact profit by 6% while it is in effect. So this is the view coming in from CLSA on this move. Let's also see what INCRED has to say, and they're saying that the impact on AUM growth to be in mid-single digits, so not that much, and they do not change any estimates for the company and the stock price that they have going ahead. So that was INCRED on this move by the RBI. IIFL then, they're saying that the impact on disbursements may be very limited. This move may hit customer acquisition if the ban is prolonged, and cards are contributors to the fee income of almost 2% of the asset under management. So that is what IIFL has to say. And lastly, let's also take a note at what BOFA has to say on this, and they're saying that the curbs are likely to not impact customer acquisition funnel going ahead. They're seeing a marginal impact on digital EMI cards acquisition. The curbs may inhibit cross-selling digital loan products, and the curbs coming post-seasonally strong festive season as well. So they should not have that much of an impact on Bajaj Finance going ahead. The impact on near-term growth outlook is likely to be limited. So that is what BOFA is saying. The common consensus out of all of these brokerages is that this move by the RBI on Bajaj Finance is not going to have that much of an impact. The stock was down 1.8% in trade yesterday. So after all of this coming in from the brokerages, let's see how the stock acts in today's trading session.
Well, yes, all eyes will be on Bajaj Finance, but let's shift focus on the macro front, I'm talking about the October trade data. Yes, the trade deficit for the month of October, that has expanded to $31.46 billion from $26.31 billion in the same period last year. Now, the sharp uptick in the trade deficit, that is due to the rise in gold imports, and this is ahead of the festive season. And the overall imports, that also rose sharply to $65.03 billion from $57.9 billion. Meanwhile, exports, that also came higher at around $33.57 billion. And this is despite a hike in the commodity prices. And the government sources are also saying that green shoots that is seen in September, and that is now stabilizing, and that augurs well for India's exports as well, Snehi.
Absolutely, and the government has also launched the 8th round of commercial coal mine auctions. Now, talking to ET Now, Coal Secretary Amrit Lal Meena said that the share of commercial coal in overall production is expected to be hit by 15% by 2030. Listen in to what he had to tell us.
In this 8th round of auction, which have been launched today, total 39 coal blocks have been put to auction. 35 are being put to auction for the first time, and 4 coal blocks are the one which were offered earlier, but there were either no bidder or single bidder, so been put to auction again.
Okay, in last 7 auction round, how many coal blocks are completely operational as of now?
See, out of total 7 rounds, 91 coal blocks have been successfully auctioned. And out of 91 coal blocks, 5 coal blocks are into commercial production, producing around 8 million ton of the coal. This year, another 4 coal blocks will come into production. And the share of coal being produced from captive and commercial both segments taken together, last year it was 116 million ton out of a total production of 892 million ton, which is about 14%. This year, the share of captive and commercial is likely to go up to about 15%.
Are you also providing some new, relief, relaxation, or some new reforms, reforms kind of measures you are taking in order to attract more investment during 8th round of commercial coal mining?
As mentioned by Honorable Minister during his speech, already government has taken many policy measures to attract investment into the coal mining.
Coal production target have been revised. It has been increased to 1,400 million ton by 2027. Can you give us the rationale behind this? Because you are at this point of time you are producing around 1 billion ton coal, which is the target for 2023. So why the government has revised the target?
No, government has not revised. These are the projected requirement of the coal and our production plans, because every year there is increased demand of power, there is increased demand from other sectors. So 1400 plus would be our requirement.
And with that, let's slip into a short break, but stay tuned on the show as post the break, we talk about the stocks that can be potential buzzers.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Now, a stock that will be in focus today is TCS, because TCS has fixed a record date for its 17,000 crore share buyback plan as November 25th. It is priced at a premium of 22%, and Somit is joining in with all the details about this buyback. Good morning, Somit, take it away.
Well, finally, TCS has announced the record date for their much-awaited buyback. Now, November 25th is the record date for this buyback, which is a Saturday, which means that for every shareholder who needs to be eligible for this buyback needs to have the shares on their account on Friday itself. Now, to have the shares on their account on Friday, one needs to buy on Thursday, which is November 23rd, which means that November 23rd is the last day to buy the shares of TCS to be eligible to participate in the buyback that TCS has announced of around 17,000 crore rupees. Now, this buyback price has been set at close to 4,150, which is at a premium of nearly 22% compared to yesterday's closing price. Now, TCS intends to buy back close to 4.1 crore shares. Now, 15% of this will be reserved for retail shareholders, which is close to 61.4 lakh shares. Now, who are retail shareholders for TCS, everyone who owns less than 2 lakh rupees worth of shares in TCS is a retail shareholder, and in case of TCS, anyone who owns less than 58 shares in TCS is a retail shareholder at a price of around 3,399 rupees, which is yesterday's closing price. Now, if you see the past instances of buyback that TCS had conducted, there have been 4 from 2017 till 2022. Now, the first 3 buyback, that is the one done in 2017, the one done in 2018, and the one done in 2020, the retail acceptance ratio, which was 100%, which means that every share given by retail shareholders for buyback was accepted by the company. However, the 2022 buyback, the retail acceptance ratio fell to around 23.7%. Now, assuming that the retail shareholder, the acceptance ratio for retail shareholder portion comes at around 25%, which means that there will be more retail participation in this buyback, and if the acceptance ratio is at around 25%, then the actual gain for any retail shareholder participating for this TCS buyback would be just 5.5%. So keep an eye out for what would be the retail acceptance ratio, because a gain for a retail shareholder participating in TCS buyback would be limited depending on the acceptance ratio. At 25% acceptance ratio, the gains would be just 5.5%, despite the fact that the buyback has been done at a premium of 22%.
Well, thank you, Somit, for sharing your perspective on TCS buyback and also what it means for the investors. But staying with the Tata Group, all eyes will be on the first Tata Group firm to go public in nearly 2 decades. Yes, that's right. We are talking about the Tata Tech IPO, which is a wholly owned subsidiary of Tata Motors, and the IPO is set to open on 22nd November next week. Now, let's talk about the key details. The price band that is fixed at around 475 to 500. And other key details are that the OFS, the size will be at around 3,042 crore with an implied market cap of around 20,283 crore. And remember that in October, Tata Motors sold stake to TPG at around 401.8 per share. And talking about the valuation picture, Tata Tech is at 28.8 times FY24 earnings on PE basis, and this is much lower than the other tech companies like L&T Tech, which is at around 36.1 times, KPIT, which is at around 67 times, and also compared to Tata Elxsi, it is much lower because Tata Elxsi is trading at around 63 times. So yes, it opens, and it's the first IPO to go out in nearly 20 years, Snehi.
Absolutely, new kid on the block coming soon from the Tata Group of companies. But I'm joined in the studio by my colleague Ansh now. And Ansh, today is the weekly expiry for futures and options. So what's our FNO setup looking like today?
Yes, so let's start with Nifty first. So yesterday was an amazing day for both Indian cricket and Nifty. While Indian cricket team won semi-final, or like people are calling it semi-finals, Nifty surpassed its long-awaited 50 and 100 DMA. It also registered biggest single session gain in over 7 months. Now let's see what happened in FNO segment. Long buildup was seen in Nifty futures with open interest increasing by 1%, keeping sentiment positive. Whereas on option front, we saw very active call buying at 19,800 strike, indicating traders expecting Nifty to go above this level, and very strong put writing at 19,600, indicating very strong support around this level. Now let's shift our focus to what FIS did. Index futures, they added 4,500 long contracts, showing bullish stance in market. Also, we saw a biggest index option selling ever. This was the second biggest selling option seen in yesterday's session, which actually indicated a range bound trade. Also, it's a weekly expiry, so traders must be betting on Nifty staying between maybe 19,600 to 19,800 level. So in a nutshell, small correction and volatility can be expected due to a weekly expiry, but overall data looks positive till Nifty stays above 100 DMA.
Well, thank you for that, Ansh, for sharing your view on the FNO snapshot. But what are the other stocks that will be in focus today? What are the stocks that can advance and decline in today's session?
Sure. So Questcorp will be the first stock in focus for today's trading session, as company has received order from NCLT sanctioning the scheme of amalgamation of MFX Infotech Private Limited, Greenpeace Landscape India Private Limited and Connect Business Solution Limited with Questcorp. Vedanta will also be in focus, as Malco Energy Limited, a wholly owned subsidiary of the company, has incorporated a new wholly owned subsidiary named Vedanta Copper International VCI Company Limited. Moving on to Ramkrishna Forging, company provided corporate guarantee up to rupees 50 crore for RKFL Engineering Industry Private. VS Retailer unveiled 3 new tractor at Agritechnica 2023 showcase. It's indigenous developed electric tractors. Talking about IIFL Finance, company is planning to infuse additional funds in IIFL Samastha Financial Limited, a material subsidiary by way of subscription of equity shares. The board approved an investment up to around 200 crore, aiming to raise equity to support growth, reducing gearing and improve capital adequacy. Talking about Suzlon S144 3 megawatt series gets RLMM listing by MNRE, which stands for Ministry of New Renewable Energy. Lastly, talking about Paytm, company partners with global travel technology company called as Amadeus to redefine travel experience with artificial intelligence. So keep an eye on the stocks.
Well, thank you, Ansh. We'll definitely keep an eye on these stocks. Thank you for sharing the stocks on your radar. But moving on to another company, Star Health. Now, they had a management meet with Nuvama, and as per Star Health management, they said that the average price hike of 20% that will be seen across industry, and the additional price hikes for 10 to 12% of their portfolio is expected. Now, the impact of this price hikes that is yet to play out. And talking about their loss ratios, the company said that that is expected to reduce as the year progresses, and also high loss ratio was seen owing to dengue as well as other seasonal reasons. Now, the early trends that is hinting at reducing the new hospital admissions, term life, ULIP foray, and if the company gets composite license. And for now, they don't have any plans to enter motor as well as property segment. So that was shared with Nuvama from Star Health, Snehi.
Well, absolutely. And let's listen into another market expert coming in then. And Anand Shah, who's the head PMS and AIF Investments, ICICI Prudential AMC, shares his view on a whole host of sectors like banking, manufacturing, metals, and a lot more. So what are the sectors that he's positive on and which ones is he avoiding? Listen in to find out.
Macros have not been easier for last 3 years, but when you see bottom up and when you see earnings trajectory generally for the index, but also broader market, that's been very, very strong. Small caps and mid caps have been outperforming. And within that, the earnings growth is also very, very much stronger than what we are seeing in large caps. Also, that's also reflecting more of a micro and a domestic story, whereas the macro remains tough. So to that extent, market's been not actually very euphoric. It's just chasing earnings. It's just chasing the reality that the corporates India, and especially within that, the segment which has been doing very badly for a decade, which is manufacturing and manufacturing related businesses, the B2B businesses have been doing very strongly.
So where are you investing in this market? I mean, where are you picking your spots?
So again, banking, while it's been very soft, large cap banking, we have been seeing a lot of FI selling within that segment. So despite of fundamentals remaining strong, earnings also coming off fairly strong, the stocks have been subdued. To that extent, the valuations have become very attractive. So banking remains the top pick among the many sectors, but outside that, there are many segments within metals in manufacturing, auto ancillaries in manufacturing, industrial cap goods, which are on the manufacturing alike. These are the areas where we've been sort of positive. Outside that, there are many bottom-up ideas in sectors which have been stressed for a while, telecom being one, airlines being another, hotels. This is again the sector which almost for a decade and a half didn't make reasonable money. And to that extent, the supply is limited, both in airline, in telecom. Obviously, I don't see new players entering in that area, nor in hotels, much supply is coming through. So it's a decent environment to be in that way.
Anand, hi, this is Anisha also joining in the conversation. I was just looking at your contrast strategy in the PMS, and your weights for financial services is 33%, manufacturing is 32%, manufacturing allied is 21%. none of these really seem like a contra strategy to me right now, because all of these names are something which people are quite bullish about on a consensus basis. I would believe IT or even other names might be a bit of a contra strategy, but what how do you define financial services and manufacturing as a contra theme then?
Indeed, I mean, this is a stocks we picked up in our portfolios 3 years back, and definitely they were not in flavor at that point of time. But even when I look at today, and when I look at the risk reward in these select stocks that we've been owning in this, they still remain fairly attractive. I think the way we define contra is the stocks where actually the implied growth is much lower.
Well, now shifting focus to a sector, building materials. DAM Capital has conducted channel checks for select building materials sectors like pipes, wood panels, as well as bathware segment. And Sharad is here with all the details. Sharad, tell us what it means for companies like APL Apollo, Prince Pipes.
Well, yes, looking at the building material channel check as per DAM Capital, the mixed set of trends are coming in, and of course, we are looking at infra upcycle as well as the real estate upcycle coming in. But if you look at the details, the mixed trends are coming in. Pipe segment, of course, restocking is happening in the PVC segment, and however, there is a price stability which is kicking in, and because of that, the demand remains decent. Apart from the CPVC segment, another variant of the PVC segment, to put it in a simple words, the recovery is continuing to still being slow, while the projects has been a key demand driver, but the retail demand, that has actually not picked it up, and it's relatively quiet. Also, the irrigation pipe segment, if you look at it, it could be, the sales could be coming in the near term as well. Moving on from pipes, now we go to the wooden panels, and of course the plywood segment, they are still seeing pain happening, and of course the transition coming into the premium segment, that is still expected to be delayed. If you look at the MDF portion, the laminates, both the segments, the healthy demand is there, but in the laminate segment, if you look at it, the pricing competition and entry of smaller players have actually become a deterrent as well for the larger players. Lastly, the tiles and the bathware segment, over here also we are seeing divergent trends coming in. The domestic demand has actually been overall weak in the pre-festive period, and also there is a tussle in the market share, especially in the micro markets. Also, the recovery overall is expected to happen over the next 6 to 12 odd months, and the channel is actually hopeful when it comes to the real estate led recovery, and given several key projects are there in the key markets, especially in the top 8 cities.
Alright, Sharad, thanks for all of those details. Now, building materials stocks will be in focus on the back of that news flow. But while it was a steady year for the large cap in summer 2079, it was actually the small cap space which saw plenty of action coming in. But how will summer 2080 pan out? Will it turn out to be a case of boom or bust for the broader markets? Let's listen in to the biggest market voices on just that.
Right now, the prices are slightly elevated, as are our emotions. But it's also justified. So if things do work out in the coming election and no accident happens in the world geopolitically, I think it's a decade of very, very strong growth ahead for us. The over-exuberance I find is really in the small cap SME exchange. There's something crazy going on there, and I think it's some accident waiting to happen. The small caps have gone up, but it's not large enough to damage sentiment for the whole market. Because normally you used to see some very, very large player or very large company blowing up, and that leverage leading to trouble. You don't really see signs of that.
Across small and mid caps, I don't see any value. And I mean, if you look at 100 companies, maybe 2 or 5 will appear to be reasonably valued. I would say 90-95 of them, even the good companies, are not offering value. So I think the long term outcomes of investing in this space, I think, will be mediocre at best.
Markets are already going through that time correction in a broader market, not in the small and mid cap, but in the broader market. We spoke, Nifty has not given 5% return, and we are in the midst of a big bull market, right? So there will be a time correction. I don't expect that any 30, 40, 50% of correction, unless there is some black swan event, there is big political instability in 2024 election, or something globally really goes wrong, world war kind of thing, so that is impossible to predict.
Last 6 months, 1 year is mind-blowing. I mean, like index has done 8%, median is smaller than 20%. So that excitement brings all the crowd into following. In fact, after 20% return, you should run from there and go to the large cap. Because large cap is going to do that next 20%. Now mid cap and small cap had their breathing up. Now they have to breathe down. Large cap had done their breathing down. They have to breathe up.
Clearly, the mid and small cap funds have done extraordinarily well in last 3 months, 6 months, 12 months, but that should not be extrapolated. Our mid and small cap funds may have delivered 25-30% over the last few months, but you cannot expect 25-30% every year. You have to look at the long-term track record. As of now, purely from a valuation perspective, large caps clearly look better than the mid and small cap at the index level. But of course, as I mentioned earlier, the trick is in the stock picking.
And that was the outlook on large cap as well as small cap by the market experts. But as we know that the assembly elections that has already kicked off in multiple states across India, and we are just a few months away from the general elections next year. So we caught up with the market experts to get a sense of how this will impact the fund flows into the country, whether the FIIs will return back after the elections. Take a look.
An outright change of government like what happened in 2004, total 100% surprise, yeah, I would say 25%. The base case has to be a sharp correction if the government's not re-elected. I think the parallel is 2004, which was a big surprise when it happened. This is a market with a lot of domestic money in, and I think that would be a big shock to the market.
India is centerpiece of FDI flows. So if I put the three things together, FDI, FPI in equities and debt inflows, the country is slated to be getting in excess of $100 billion starting post-election, which solves a lot of things even on balance of payment side and starts then getting your inflation down, which is being imported today, and gives you purchasing power and a continuation of the aggregate demand in the country. Market currently, I think, is pricing there is no surprise despite what happens in state elections. And a lot of, I'm guessing, even the banking sector nervousness is if something happens, then the taps are really open through the banks to disburse money.
Any correction, to my mind, is an opportunity, if at all, if it happens, right? I will be personally very surprised that after May election political instability, if $100 billion doesn't come in India through bond and equity, all our macro situation will still be balanced, right? And this will come because there is a clear problem. We can see the trouble in the Western market. Today MSCI World India weightage is 1.5%. Why? If our GDP weightage is 3.5%, why our weightage should be 1.5%?
We think that over a period of time, things don't happen in a very short period of time. These things take long. But our view is that there is a lot of global money which will hit Indian shores. Of course, there is large amount of money in India already from global investors, but that is only going to increase. 25-year view. We are in this Amrit Kal. We have to have that unwavering faith on the growth prospects of India and a highly differentiated growth model than any growth model that humanity has.
All right, that's the word from market experts on whether FII inflows will return to the country after elections. But with that, we're completely timed out on this edition of Market Cafe. It's a goodbye from Lisa, myself, and the team that put this show together. The market will take all the action ahead.